Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Wednesday, November 7, 2012. Well, a change of trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading we had a change of trend to the upside, tested to the resistance roughly around the 1434 level and was attracted back towards the flat Kijun-sen. Today all of that upside momentum has been lost. The sellers have closed down below the important 1400 level, and they've closed down below there in a very bearish manner, with the sellers having very strong control of this market and the sellers very strongly committed to taking this market lower. Significantly, we've had that strong bearish close down below 1400 and down below the bottom of the cloud, and it does suggest that this market is set for lower prices. We do have some strong support down around the 1378 level, and that coincides with the target for the breakout from the large flag type pattern, and this is a reversal pattern, and our target was down around this level, and there's a very strong chance that that target will be met. Now, if we do see this market rally, the 1400 level and the bottom of the cloud will now offer themselves as strong resistance to this market. So that will be a very important level once again if we do see a change in sentiment in this market. The size of the body of this candle is quite large, and that does suggest to a degree that the market may not trend down strongly all of a sudden. We could have the market relaxing. There has been quite too much bearishness all at once, and if we look at the size of this candle compared to any in this recent past, we don't have any candle sizes that size, and it does suggest that the market may have done a little bit too much too quickly. So there is an opportunity for the market to pause. But we really should be watching the low of this candle for the potential for the market to continue trending down. Very strong support down below the 1378 level as well, down to the 1370 and then to the 1356 level. But that 1378 surely is a target for this market. In terms of the Fibonacci extension, we're examining the relationship of the new current first time frame downtrend to the previous time the market was trending down, and here significantly we've seen the market trade through the 100% level, test to the 161.8% level, and we can see rejection from there. So that does suggest that there is a possibility that we could see the market attempting to rally from this level. We're not likely to have a change of trend. A change of trend would mean a candle with a higher high and a higher low, and I doubt that the market's going to be brought back that strongly to establish a higher high and a higher low, especially with the strong resistance overhead. But it is a strong possibility that we could see rejection from around this 161.8% level. If the market does continue trending down strongly, the next Fibonacci level is down at the 261.8% at the 1365 area. In terms of the Fibonacci retracement as well, once again rejection from the 161.8% level, and the 261.8% level coincides with the Fibonacci extension level, and we should be looking for rejection here where the market's trading at the moment, once again from the 161.8%. But as I've mentioned, if we do see the market continuing to trend down, then this area around the 1367 and 1365 with the other technique do suggest that that will be very strong support. Now, in terms of Fibonacci, very important event today. We have a breakout down below the bottom of the cloud, and that's quite significant. For the past couple of weeks, the market was very indecisive in big picture terms in the long-term time frame by trading within the cloud. A neutral market today, a very solid bearish breakout down below the cloud. It does suggest that this market is destined for lower levels, so a bearish market in the long-term time frame. The market remains bearish in the medium and fast-term time frames by trading below the Kijun-sen and the Tenkan-sen. And if we look back to here where we had this bearish breakout down below the Kijun-sen and we suggested that it was quite a change in sentiment in the market. It certainly did turn out to be that way, where we had the market continue to be selling off, find support down around the bottom of the cloud and around the 1400 level, attempting to rally and finding resistance roughly around the Kijun-sen, and now today the sellers coming back into the market and selling it off very strongly. So a bearish market in all three time frames. The Chikou span is supporting the bearishness in this market. It's below the corresponding price action. And the short-term dynamics in terms of the buyers and sellers is in favour of the bears as well. So bearish in all time frames, but certainly, as I've mentioned, this market does look like it's done a lot of work in one day. It wouldn't surprise to see the market test down to the 1378 level for buying to come in, and for the market to perhaps test sideways, or to test back up to around the 1400 round number level that has potential to offer as resistance.